Welcome to the Galluzzo Team Podcast, where we explore the world of real estate and provide insights, tips, and advice to help you achieve your real estate goals. Whether you're a first-time home buyer, a seasoned investor, or simply interested in the latest trends in the housing market, this podcast is for you. As one of the top real estate teams in the industry, we bring decades of experience, extensive knowledge, and a passion for helping our clients succeed. We'll be discussing a wide range of topics, including buying and selling homes, financing options, market trends, and much more. So sit back, relax, and join us on this exciting journey through the world of real estate. Whether you're looking to buy, sell, or invest, the Galluzzo team is here to guide you every step of the way. We are here with John Presti, a producing branch manager at Cardinal Financial Mortgage. What's up, John?
Hey guys, thanks so much for having me on the first official podcast. Really excited to join you guys and get some insight on your business and have you guys get some insight on my business and help educate and inform everybody in the the wonderful world of real estate that we all live in.
That's great. We are very excited to have you as well. This is our first podcast as well, and we are still trying to figure it out. But we also have Elena Galluzzo.
Hello, how are you?
And Chris Galluzzo.
Hello, everybody.
Hence the Galluzzo team.
That's the Galluzzo team, and I'm Christo. But John, we wanted to kind of pick your brain a little bit and figure out what's the market for the loan process. What are the rates going? What's the update for the market right now?
I personally think the market right now, a few weeks ago, the Feds just raised the rates of 25 basis points, right? And everybody was kind of confused on what was going to happen. Were they going to raise it? Because they've wanted to keep raising the rates, right? That's what the Feds have been doing over the last year and a half. They've been raising the rates. But obviously from the fallout with the news of Silicon Valley Bank and a lot of other lenders that were crashing and burning, there was some news that the Feds were not going to raise the rates. I thought that they were still going to raise the rates a couple of weeks ago, just because they've been so gun-ho on actually raising the rates that they kind of had to keep their stance at raising those rates. But every time the Feds raise the rates, it's not necessarily means that the rates go up a quarter of a point. So it's not like they went from 6% to 6.25% overnight. We actually saw a drop in rates when the Feds actually spoke. What the telltale sign of interest rates is typically the 10-year treasury mark. That's what a 30-year fixed rate mortgage is based off of. So we had a nice little run for a couple of weeks where rates were in the high fives, and they slowly started going back up into the low sixes, mid sixes, where I think for the remainder of the year, it's going to steady out and kind of stay that way. Or hopefully at the end of the year or beginning of next year, we start to see a little more relief. With all that being said, as you guys know, being a top team on Long Island and the country, we're all as busy right now as we've been over the last few years. The buyers still want to buy. Hopefully, the main issue is obviously getting more and more inventory for the buyers, right? There's a huge demand and obviously a shortage of supply. But that's kind of like where we stand right now. As far as new applications, people are inquiring every single day about, buying with us. Our applications are pretty much higher than where they were at the height in 2021. It's just obviously, closings have kind of come down because of the lack of inventory and obviously the lack of refinancing as well, too, for the buyers.
John, to be clear, the Fed rate is not tied into the mortgage rate.
Correct.
Just because most people think, they raised the Fed rate, that means the mortgage rates are going to go up.
All the Fed rate is just the rate that the Feds lend the banks, overnight money. That's all it is. And a mortgage rate is based off of a 10-year treasury bond. Now, obviously, it doesn't have a direct correlation, but it could have some type of domino effect. And it's really what investors believe is what's going on in the market. If they want to play in the stock market, if they want to put their money into the treasury bond market, whether it's a 2-year treasury, 10-year treasury, that's really the direct correlation. That's a really great question.
That's awesome. So when you said the Fed, when they talk, how does that even work? Like when they say something about the market, because I always hear about unemployment, there's a recession coming or anything crazy like that.
Well, they only put out the news that they want us to hear. Basically, the Feds, they have a Federal Open Market Committee, which is usually a 2-day meeting, and then they come out with the news of basically what their decision was based on consumer price index and everything that's going on with the economy for their decision to either raise rates or lower rates or stand flat and not do anything.
Very nice. So another thing I was thinking about with interest rates, some people, let's say they get a high interest rate, they want to figure out another way to, reduce that interest, maybe by doing like a biweekly payment. Has anyone ever used anything like that with you or with Cardinal?
Absolutely, yeah. I mean, if you can do, bi-weekly or bi-monthly payments and, and you have that luxury, I think it's great to be able to do that, because you're going to cut 6 or 7 years off of your off of your term of your mortgage. So from 30-year mortgage, you'll go down to 23 or 24-year mortgage. So doing a bi-weekly or bi-monthly payment doesn't necessarily lower your payment, but it shortens the years of your actual loan. To get a lower interest rate right now, most people, want to look at adjustable rate mortgages, but adjustable rate mortgages are pretty much just as high as fixed rate mortgages. Like if you look at Chase or Bank of America, not so much Wells Fargo anymore, but if you look at their websites, they post their rates and they advertise their rates daily, right? So it's usually, for me, I'm always just checking to see where they're at, but their adjustable rate mortgages are within 0.1% of their fixed rate mortgages. So right now, what's made this market a little more, difficult is for a buyer says, okay, maybe I'll take out a 5-year adjustable rate mortgage or a 10-year adjustable rate mortgage where their rate is fixed for 5 years or 10 years, and then it adjusts accordingly after that. But right now, the 2-year treasury, which is what adjustable rate mortgages and 15-year mortgages are based off of, is inverted with the 10-year treasury. So right now, to take out an adjustable rate mortgage just doesn't pay for consumers to be able to do, and it's made this market a little more difficult, because somebody that can't afford, or it's not as attractive to them to take out an interest rate at 6.5%, maybe they're thinking, okay, maybe I'll take out an adjustable rate at 5.5%. But they can't really get that if it's at 6.5% and adjustable rates at 6.25%. So it really makes no difference to do that adjustable rate. There's always the option of buying down your interest rate via paying points. To me, doesn't fully make sense right now, because if you're paying points to lower your interest rate down, right now in this market, you're still going to get a high interest rate. So if you pay a couple of points to go from 6.25 or 6.3% down to 5.5 to 5.75%, eventually in the next 12, 18 months, 24 months, whenever it happens, and rates are in the low 4s or 4.5%, mid 4s, you're going to end up refinancing, whether you have a 5.75% or 6.5%. Like, you're just going to end up refinancing. So to pay that extra money up front, you're going to end up losing it. Who cares about your interest rate? Like, every 5 to 7 years, a homeowner either refinances their mortgage, fixes their mortgages, and or sells the property and buys a new property. So by the time they redo their mortgage, either refinancing or selling and buying a new one, they don't even know if they had a good rate or a bad rate. So like, as long as, to me, what I always express to buyers, right, is as long as you're comfortable with the monthly payment and your out-of-pocket expense to get into the home, that's really all that matters. To me personally, like, how much did it cost me to get into this house, and then how much is it going to cost me per month to live here?
Exactly. Elena, what was our rate when we bought our house in 1988?
18.5%.
Exactly.
And then we refinanced for?
Like 14%? We thought we were doing good.
And then in 1994, we bought a home in Dix Hills, and what was our interest rate?
9?
9%.
Yeah,
So historically, this is a fantastic market to buy in,
absolutely.
right?
It's low.
It
when
is.
people say 6% is high, I crack up.
Yep.
I literally laugh. But they have nothing to compare it to. They're younger,
Yeah. And it's still the cheapest money that you could borrow. Like, a mortgage historically has always been the cheapest money that you could borrow. It's the most expensive because it's the biggest loan that you're going to take out. But historically, the interest rate on mortgages is always the lowest debt that you can, take out for yourself. Do you see? I know. Listen, you guys are, for anybody that knows the Galluzzo team, they are a top team. In or on Long Island, however you're supposed to say it, in the country as well too. But do you guys deal with a lot of the sellers that you deal with? Are they moving out of state? Are they downsizing? Are they upgrading? What have you guys normally been seeing in the market?
Florida, baby. A lot of their sellers are either they're moving on the island for family reasons, or they're going to be going, to Florida. I've been seeing a lot of South Carolina, but it really depends. There's so many people moving all over the place. but Florida definitely is a hot market right now.
Yeah.
We do see a little bit of a movement on the over 55 community.
Okay.
So there's a lot of new 55 and over communities and older communities like the Greens, Country Point, and Plainview.
Seasons.
The Seasons now is very desirable. And so we're seeing a lot of movement out of some older people over 55 into these 55 and over communities, which is giving us some more business.
Going from one into another.
Correct.
Just upgrading the community.
It's almost like a sideways move.
Right.
They're spending about the same amount. So if we sell their house for $900,000, they're moving into a $900,000 55 and over community.
Yeah.
They don't have to take care of the lawn. They don't have to take care of the
they're
house.
gorgeous.
They're gorgeous. They're
Country
new.
Point is gorgeous too. Yeah.
Beautiful. They play pickleball. You know,
Yep.
right, Elena?
But yeah.
We have to. Elena and I play pickleball. We need some work.
You guys are the pickleball
We don't know the
peoples.
rules.
I've played pickleball 2 or 3 times. I actually played in a tournament. Compass was hosting it, and they asked me to, kind of co-host with it. And I said, you know what, I'm not going to play. And then at the last second, I decided to play. And I played, it was doubles, and I played with one of my partners here, Russ Silver. Shout out to him. And we ended up winning the whole tournament.
Of course you did.
Oh,
It was
dang.
nice. Yeah. It was like very, I was telling you guys last week, it was actually like very reminiscent of like college, because we played on the basketball courts, and it's at the YMCA in Huntington. And above it is the track for the gym.
Yes.
So we had 50 people at the track watching the championship match. It was actually pretty exciting.
That's good.
Pickleball
Good thing you won,
is
right?
taking
Yeah,
over.
exactly.
Regarding the loan process, for anyone that's like looking to get like pre-approval, what should they do when they're actually going for the process to get ready? Like what type of documents should they get, or
Sure.
what's the difference between like a pre-qualification and a pre-approval?
Sure. So the first thing that you should do is make the phone call and speak to somebody. Speak to a professional, right?
Cardinal Financial.
Yes, please.
Yes.
And what you want to do on that phone call is just get to know them, right? And, after 10, 15-minute conversation and you feel comfortable with them, you start the application process. And that could be done over the phone, or that could be done online. It's a mix of both. But really that first initial phone call where you're really just getting to know them is, to me, the most important thing, because they're giving you all their information, their social security number, their bank account information, how much money they make, how much money they have, or they're going to be borrowing. So they need to know that the other person sitting across the table or over the phone is a real human being as well too, and has gone through this process before, and understands them as buyers, and what their goals are. To me, is the most important thing. But the most important process in applying for a mortgage is the actual application, right?
If a buyer decides they want to get more than one estimate,
Sure.
and they go to XYZ Loan Company and Cardinal Financial, talk to John Presti, is their credit going to be hit and marked up and be downgraded?
No. You can run your credit today, and maybe your name was misspelled, and we run it again tomorrow, and it's the same exact credit score. Go to 2 places, maybe 3, but everybody's pretty much at the same these days. It's really all about who you trust and who you feel most comfortable with. Everybody's pretty much the same. It's just, who you feel more comfortable working with,
Right.
and, who you want to spend the next 3 months
Relationships.
with. Correct.
Trust, relationships, just like the Galluzzo team. We're a family. Everybody wants to work with us because they trust us.
Yep.
We built up a long term of positive ability to get their deals done, so they come to us for those reasons.
Yep. And you want to make sure that when they have family member or friends, you're going to be the first person that they think of when it comes to real estate or mortgages or homeowners insurance. Let me call Chris. Let me call John. So you want to make sure that you're holding their hand throughout the entire process. That way they come back to you. But just to kind of go back to that, so a pre-qualification is just somebody taking an application over the phone, not collecting any documents, writing on a piece of paper, a pre-qualification letter saying you qualify for this based on the information that you gave the loan officer, right? A pre-approval letter is one step further, where on top of giving that information and taking the application, you're actually giving the documents, and that all depends on the application. Typically, you need your W-2s, your pay stubs, bank statements, and a driver's license. When you get those documents, the loan officer is going to review them and issue a pre-approval letter. Again, a pre-approval letter and a pre-qualification letter, as long as you're in the mortgage business and you have a mortgage license, you can type up that pre-approval letter or pre-qualification letter. The issue with those is that it's only as good as the loan officer that's giving it, right? So let's say that the borrower made $100,000 in 2022, but this year in 2023, they're only on pace to make $80,000. So their income is declining slightly. Maybe they are in a commission-based business. Maybe it's overtime. But most likely you're going to go off of, the bank's always going to take the worst case, and they're going to go off of the lower of the two and qualify you off of your year-to-date income. Unless there's a really good explanation, you were on maternity leave and you weren't working for that short period of time. But a loan officer that's maybe not as experienced or is a little busy could possibly miss that, but still issue that pre-approval letter. What we do at Cardinal is one step above that because of the technology that we have, which is why it was exciting for me for Compass and Cardinal to align themselves, because all over the country, the two of us, and the technology is at another level that I really think it brought the two companies together. But what Cardinal does is, as soon as we take the application and we gather the documents, we don't issue a pre-approval letter. We take that loan and submit it directly to an underwriter. Doesn't have to go to a processor, it goes directly to an underwriter, and the loan gets fully underwritten up front. And the underwriter produces what's called a commitment letter. That only an underwriter, a licensed underwriter, can issue a commitment letter. Again, a loan officer, anybody pretty much in the mortgage business can issue a pre-approval letter or a pre-qualification letter, but only an actual underwriter can issue a commitment letter. And as you guys know, a commitment letter usually 9 times out of 10 only comes when a deal is actually in contract, which is scary and kind of backwards to think about. Is that, the commitment letter is your actual approval from the bank, just how it sounds. It's the bank's commitment to lend you guys money, right? And 9 times out of 10, it doesn't come until you're actually in contract. And that's when the realtors and the attorneys are harassing the bank. Where's the commitment letter? Where's the commitment letter? Because that shows that there's an actual deal in place. But again, because of the technology that we have, we actually do that up front. The loan is fully underwritten, subject to an appraisal, title report, homeowner's insurance, proof of down payment. I mean, the loan is done and pretty much cleared to close, other than third-party items while they're shopping for a home down the line.
So
Time frame works.
That's the long-winded answer.
Elena, as someone reviewing all the documents usually, Elena's really in charge of most of the documentation. She puts it all together. How important it is to get a commitment prior.
Oh, that would be amazing. That's like a cash deal, really, like
Right.
offering, this person's ready to go.
Yep. Cash deal. It's essentially a cash deal, right? And it's just subject to appraisal and title, which a cash deal, correct me if I'm wrong, but a cash deal is essentially subject to appraisal and title as well, too, right?
Sometimes not appraisal, but definitely title.
Right.
Are you looking to buy a new home or refinance your existing mortgage? Look no further than Cardinal Financial. Our team of experienced professionals is dedicated to helping you find the right loan to fit your unique needs and goals. We offer a wide range of mortgage products, including conventional, FHA, VA, and jumbo loans, as well as refinancing options. Our streamlined process means that you'll receive personalized service from start to finish, with fast turnaround times and competitive rates. At Cardinal Financial, we understand that buying or refinancing a home can be overwhelming. That's why we prioritize communication and transparency, keeping you informed every step of the way. We'll work with you to understand your financial situation and provide tailored solutions to help you achieve your home ownership dreams. Don't let the mortgage process hold you back from your dreams. Let Cardinal Financial help you achieve your goals today. Thank you to Cardinal Financial for supporting the Galluzzo Team Podcast. So now that we're back, so do you guys have any questions for John or?
Well, I think we see the market improving right now.
Yeah,
So I do see it's a spring market. It usually does ramp up. And thankfully, we have a lot of buyers right now that are looking for houses. And we are very confident that they'll be coming on the market in the near future. So we're hoping that this continues.
I mean, historically, right, from February to April, usually you see 20-30% increase in listings. Is that right? Or typically, like, where they come about. So hopefully there's some more inventory that's coming out. So over the last 2 years, with all the listings you guys have had, I'm sure you've had houses where there's 30 to 40 offers on multiple houses, right? You guys always have a lot going on between listings and buyers. How do you break that down to a seller?
Well, when we get a lot of showings like that, we raise the price.
Okay.
All right. If we get 45 calls on one house, we realized it's underpriced, and it was very hard to gauge what was the right price during COVID. So that was our way of gauging when we would get too many calls. So if we had a house at 400,000 and we got 45 calls, we raised it to 450 that day, and then we'd lose a couple. So that's how we would do it. So we would just basically raise the price, and then we started to price things correctly, because you don't want 40. If you're getting 40 offers, the house isn't priced correctly.
Sure.
That's it. Having a lot of offers doesn't mean anything.
Right.
It just means that you're underpricing your home.
And this happened in North Babylon. We underpriced.
Yeah.
It was our first COVID house.
It was
Okay.
and we corrected it very quickly.
Yeah.
We went up
and we
100
lost
grand.
about 25 people from that group.
But you got rid
Out
of
And we
of
ended
70,
up-
it was insane.
Yeah. And then we ended up selling it for $540,000 or something like that. So we were attracting that's right, it was $450,000 house.
So when 100
We were
grand over.
attracting $450,000 buyer. We raised it to 500. We lost a few, and it ended up going over. Since that house, clearly it's very hard to gauge sometimes. Like even now the market has changed a little bit again, and the houses are starting to creep up again.
Right.
Where they had gone down about 6 to 8 months ago, they started to come down.
Sure.
Now they're going back up, creeping back up. So like even today we had like a $1.1 million home, and he said it. He's like, it's gonna go for more, because it wasn't doing that. We were finally getting houses that were selling for asking and a little bit under. It's a little bit more normal, but pre-COVID.
Sure.
Now he was right. It ended up, it's way over 1.2. Whereas 8 months ago, you might have gotten it for around the ask.
There was that run of like August to January.
Yes, it was
February,
a short
where-
run.
And it was a lot of shock in the market because of how, you look at it in March of last year, rates were still in the threes, right? So like that was a huge shock of how quickly and aggressively the rates increased. And there was that time in the market from like really July to January of this year where, you could negotiate seller concessions.
You could do it, yeah.
It's amazing though, like the process that Elena did. She put everything in a spreadsheet. She had everything lined up with how much they're paying, how much they're putting as a down payment, what bank they're using, are they pre-approved, pre-qualified, cash. She had a whole spreadsheet down. She had from top to bottom there.
Yeah, I would put the best
Yep.
offers first and then go down from there.
Right.
That's how I present. So it's not confusing. So even though if it was like even a great offer, might not be the best offer for that seller.
Right.
So if it's all cash and they can move in 30 days, and we've got a seller here who's been in the house for 50 years, they're not moving in 30
Right.
days. They're like, slow your roll.
Right,
We
right.
need time to pack. So that might not be the best buyer, even though it's the highest price.
Sure.
But I would do it from best to lowest and present that way. But terms are important,
Yep, absolutely. Yeah, I always see, I always like to be on the emails, like when a real estate agent is submitting an offer. Sometimes if they have nothing to sell, hey, this loan can close in 3 weeks or at whatever the seller wants them to close at. If they have nothing to sell,
Right.
if they're renting or if they're living at home, just so you know, we can close in 3 weeks, or it could be 60 to 90 days, whatever the seller. It's the seller's world, and we're just
It's the
living in
seller's
it.
world. Most sellers they don't mind a mortgage because that gives them breathing space and the
Right.
time, and they can leave like ladies and gentlemen.
Right.
They like,
I like
the
that.
45 to 90 days.
Yeah.
Because they panic.
Yeah, it goes very quickly.
They panic, right? They don't realize how quickly the 3 months will go by, and they haven't hit the attic and the basement yet.
Think of it, 3 years ago, we were all locked in our houses. It goes like that.
Yeah.
We put together our mantra for our team, and it's helping homes find their people.
Okay.
So we did this while we were in Vegas. We were staying at the Dream Hotel in Vegas, or the Ace Hotel.
Oh.
And it was 3 a.m, and we're like, we need a team like mantra.
Yeah.
And we came up with helping
It's a
homes
tag-
find
tagline.
helping homes find their people.
It's a nice
Okay.
slogan.
Houses have a heartbeat. Houses feel and choose who they want to live there.
Yeah.
And they're the one. People always think that they are choosing the house. The house is choosing you. People always think that they decided to have a baby. The baby's choosing you.
Yeah.
So we want to think we're in control, but we're not.
Well, it just goes back to whatever is meant to be is meant
What's
to be.
meant to be is meant
Yeah.
to be. Like there are outside forces choosing for you, so you don't have to think so hard.
Yeah.
Elena does tarot card readings as well.
Do you really? No.
I do, but not recently.
She was very good at it.
That's awesome.
Looking for an authentic Italian dining experience right here in Commack, New York? Look no further than Ma Bella Italian Restaurant. Our menu features classic Italian dishes made with the freshest ingredients and prepared by our expert chefs. Start off with our delicious antipasti featuring a variety of cured meats, cheeses, and vegetables. Then move on to our mouth-watering pasta dishes like our homemade lasagna or creamy fettuccine alfredo. And don't forget to save room for dessert. Our tiramisu and cannoli are both customer favorites and the perfect way to end your meal. But don't take our word for it. Come visit Ma Bella Italian Restaurant today and experience the Italy right here in Commack. Thank you, Ma Bella Italian Restaurant, for supporting the Galluzzo Team Podcast. Buon appetito. All right. Thank you for joining us on the very first episode of the Galluzzo Real Estate Teams Podcast. We hope you found our discussion on real estate loans and the loan process with John Presti from Cardinal Financial insightful and informative. Getting a loan for your real estate needs can be a daunting process, but with the right guidance and information, you can be informed, make decisions, and get the funding you need to achieve your goals. Stay tuned for more episodes where we'll be diving deeper into the world of real estate, providing you with valuable insights, tips, and advice that you can use to navigate the complex real estate landscape. Don't forget to subscribe to our podcast so you don't miss out on any future episodes. Thank you again for listening to the Galluzzo Real Estate Team.